Well, we continue to keep you on top of earnings, and Sanghvi Movers is the one which came out with numbers as well. We have Rishi Sanghvi, who's the managing director at Sanghvi Movers, to talk to us about how those numbers panned out. Well, at the outset, Rishi, good morning. Hi, this is Harsha. At the outset, it doesn't look like a very enthusing set of numbers. Was it just the monsoon and more of client side which has played spoilsport for you this time around? Give us perspective. Is there anything else which is dragging the numbers both in terms of top line, or is it just seasonality?
So, hi Harsh, good morning and thanks for having me on your show. It's
Great
always a
having you.
pleasure to interact with you.
Great having you,
You
Rishi.
know, I wouldn't say that it is a very unassuming set of numbers. On the top line, we have delivered a 57% growth. Our profit for the year is 17 crores greater than what we had achieved in the previous quarter. With the order book at 1,239 crores, which is executable and deliverable in this financial year, we are confident that we will surpass all our revenue and profit numbers till date and set historical numbers in this year. While there has been a limited impact of the monsoon in the second quarter, we really foresee, based on the order booking that we have, the deployment of resources in the second half of the year, we really foresee our top line crossing the 1,000 crore mark, definitely executing or delivering that order book of 1,239 crores and setting not only a top line but also a bottom line record for this company in its history.
And Rishi, so while that sounds optimistic, hi morning, this is Snehi also joining in. Could you give us a sense on where the margins could be headed now going ahead? Because this quarter we've seen a sharp cut in your margins. So back above the 45% level, is that something that we can aim for going ahead?
You know, our business model is evolving. We are operating, I would say, three separate business segments now, which I think the industry and our peers is taking a little time to appreciate. We have our core rental business, which is our crane business, where the EBITDA margins are 55% and above. We have our EPC or renewable EPC business under our wholly owned subsidiary, which is Sangreen Future Renewables, where we have posted a 20% EBITDA for the last quarter. But we believe that in the long term, it will settle between 10 to 15% as we scale up. And we have an international expansion into Saudi Arabia, where the EBITDA margins there are similar to our crane rental business on par. And with our operational expertise, we believe we can pull up those margins to bring it on par with our India business. So margins is a function of the revenue mix, which is coming from particular segments. And we believe that at the end of the year, we will have, as you rightly mentioned, a blended EBITDA margin in a very healthy range, hopefully crossing what you indicated of 45%.
And Rishi, so correctly put, you've got very, very healthy pipeline. This 750 odd crore, what's the execution looking like? I believe that 10% of that may not get executed in FY26. So you'll book roughly 680 to 700 crore of top line in H2. Is that the right way to think of this?
Yes, I would definitely think so. You know, the Indian economy is on fire. All sectors are booming, specifically the renewable wind industry, cement, steel. You know, if you open the news as shared by your news channel as well, there is exuberant optimism across most sectors, and there is heavy capex that is deployed. So although we are having an order book of approximately 800 crores, and please bear in mind we have another 6 months to continue booking orders for this financial year, we are still on a conservative estimate saying that due to some project delays, due to external factors that may not be in my company's hands, there may be a spillover of this order book into the next year. So while we are saying we have approximately 800 crore order book, on a abundantly prudent and cautious side, we are saying 10% may spill over to the next year. But at the same time, we are saying we have another 6 months to further book orders, and we definitely foresee the order book going up, which will be announced after our Q3 results, and this movement will be seen in the order book as well.
Rishi, you did mention Capex, around 629, 630 odd crores of Capex that you have. Give us a sense of how much utilization of this Capex has already happened, how much is left, and what is the positive for your crane business on the back of this Capex?
Absolutely. So this year we are doing approximately 630 crores. The capex is split between 400 for our India business in the crane rental business and about 230 crores for the Saudi Arabia, which is also in the crane rental business. It is an expansion of our core. Now, of this 630 crores, I think we have done about 250, 300 crores of capex already, and the entirety of the capex has moved from the port to the site. So every single asset that we have purchased has moved directly to site. Therefore, we are very good at planning our capex, looking for the demand, and moving these assets to site. For the remainder of the year, we will do the balance capex, which is about 400 to 350 odd crores, for which we have a secured order book, and we have long-term contracts secured for a majority of this capex. So if you look at the demand, there is a significant demand for cranes. Our inquiry pipeline itself, and this is maybe the first time we are announcing this, is more than 2,000 crores in the India business. In Saudi Arabia, we have approximately $45 to $50 million of crane rental inquiries, which need to be executed in the next 24 months. So I am very excited and bullish for our core crane rental business, bearing in mind that this is a high EBITDA margin business, and this is our core business.
Rishi, lastly, before we let you go, that Saudi Arabia expansion that has just happened, give us a sense of if there is any more geographical expansion that you're targeting under your Elevate 2030 mission. What's the outlook over there?
So Elevate 2030, and thank you for asking this question, is our 5-year strategic roadmap. Currently, we are focused on the Saudi Arabia market because there are more than $2 trillion worth of projects that have been announced in Saudi Arabia. We have a stated ambition of becoming a top 3 crane rental player in Saudi Arabia, but we are not open to opportunities, and we are seeing a lot of activity in Qatar as well as UAE, both for infrastructure and oil and gas. So we are very positive, and as we expand in Saudi Arabia, we will be looking at all opportunities across the MENA region.
Rishi, on that note, we'll let you go. Thank you so much for joining us, and we hope to interact with you next quarter as well. And thanks for being so candid with us today. Thank you.
Thank you, everyone.